The Dow Jones Industrial Average hit a new all-time intraday high of 53,092 today, before reversing to close 130 points lower at 52,925. The Nasdaq Composite fell 302 points, or 1.16%, to 25,818. The S&P 500 dropped 0.45% to 7,503. The Russell 2000 lost 0.78%. The VIX climbed 4% to 16.20. The same semiconductor stocks that led Monday's bounce got cut in half today. The Philadelphia Semiconductor Index fell approximately 6%. Intel dropped 10.5%. Advanced Micro Devices lost 8%. Teradyne plunged 10.9%. Western Digital sank 8.7%. SanDisk fell roughly 14% pre-market and never recovered. The VanEck Semiconductor ETF dropped 3% pre-market and extended losses through the close. And the Dow hit a new record while all of this was happening. Welcome to Market Lens. I am Daniel Reed. Today is July 7th, 2026. This is the end-of-day edition, and I am going to do something I do not normally do. I am going to hold the morning playbook up against what actually happened and show you exactly where it worked, where it did not, and what that tells us about tomorrow. Before I get to the scorecard, let me frame the session correctly. The catalyst was Samsung Electronics. The company reported a record quarterly operating profit of 89.4 trillion won, roughly $58.4 billion, a 19-fold increase from last year. Revenue was 171 trillion won, approximately $112 billion. Both numbers exceeded analyst consensus. Samsung stock fell 7% in Seoul. SK Hynix dropped more than 7%. The KOSPI index cratered roughly 5%, triggering a circuit breaker that halted program trading. The Nikkei 225 fell 3.5%. Kioxia crashed 10.7%. It was the single cleanest sell-the-news event in the memory chip sector this cycle. The sell-off spilled into U.S. pre-market and carried through the cash session. Intel, AMD, Micron, Western Digital, SanDisk, every name that benefited from the memory pricing boom got repriced today. And the mechanism is straightforward. Samsung management guided for full-year operating profit around 300 trillion won, about $196 billion. That implies second-half profitability has to maintain the current pace. Combined with the $2 trillion capacity expansion Samsung and SK Hynix announced last week, the market is now pricing the supply response before it happens. That is the same call I made in this morning's edition. Now, here is the scorecard. The morning playbook gave 5 actionable trades. I want to walk through each one. Trade 1. Do not chase the semiconductor bounce from yesterday. If you are holding chip stocks, take partial profits or tighten stops. This was correct. The SOX index fell 6%. Every semi-name that rallied on Monday gave back those gains and more. The morning call to reduce exposure before this session saved anyone who listened from a 5 to 10% single-day drawdown in their chip holdings. Trade 2. The Dow rotation is still intact. Dow futures were positive while Nasdaq futures were negative. Financials, energy, and consumer staples are where the money is flowing. This was partially correct. The Dow hit a new intraday record at 53,092. Energy was the top-performing S&P 500 sector, up more than 3%. Occidental Petroleum and Devon Energy each gained 5 to 6% as oil prices surged on fresh Strait of Hormuz attacks. But the Dow could not hold the record and closed in negative territory. The rotation trade worked on a relative basis. Dow outperformed Nasdaq by nearly a full percentage point, but it did not deliver absolute gains. Trade 3. Do not trade the Samsung headline. Trade the reaction. The stock fell 7% on a record profit. Intraday, it was down nearly 10% before recovering. That is a textbook sell-the-news event. This was correct. The morning script explicitly warned against catching the falling knife in memory stocks. And anyone who tried to buy the Samsung dip in Seoul or the U.S. semi-dip at the open got hit with another wave of selling into the close. Trade 4. FOMC minutes tomorrow at 2 p.m. First Warsh-era minutes. Waller pushed back on Warsh's communication style. Reduce oversized positions. This was a forward-looking call and it remains valid. The minutes are the next major catalyst, and positioning into that release still matters. Trade 5. Earnings season is starting. Delta reports Friday, PepsiCo reports Thursday. The bar is high. Guidance matters more than beats. This was also a forward-looking call. PepsiCo options are pricing a 4% move by Friday in either direction. Samsung has already established the pattern. Even historic beats are getting sold. The guidance commentary from Delta and PepsiCo will set the tone for whether that pattern extends beyond semiconductors. 5 trades. 3 executed correctly in the same session. 1 partially correct. one pending. That is not a boast. It is a verification that the framework this morning's script used to analyze the market was structurally sound. The calls followed from the data, not from conviction. Now let me layer in what the morning script did not predict, because the tape added two variables that changed the calculation. First, oil. West Texas Intermediate crude surged 4.2% to $71.40 a barrel after reports that Iranian Revolutionary Guard forces fired on two commercial vessels near the Strait of Hormuz. The morning script had oil near 68.50 and did not anticipate an escalation that would push it above 71 intraday. That move lifted the energy sector to the top of the leaderboard and added a geopolitical risk premium that was not in the morning setup. The 10-year Treasury yield rose to 4.54%, up 7 basis points, partly on the oil-driven inflation concern. Higher yields added pressure on long-duration tech names that were already getting hit by the semiconductor sell-off. Second, the Dow's inability to hold the record. The index crossed 53,092 intraday and then reversed more than 250 points from the high to close below 52,930. That is a bearish intraday reversal pattern. It does not break the Dow's uptrend, but it introduces doubt. If the Dow cannot hold 53,000 after 3 consecutive sessions at that level, the leadership trade that has been carrying the rotation narrative starts to fray. Here is where we stand entering tomorrow's FOMC minutes. The S&P 500 closed at 7,503.85. That is below the 7,537 level where we opened this morning, and right at the 7,500 round number. Support at 7,350, the level that held during the June 23rd semiconductor crash, is now 150 points away. Resistance at 7,550 held for a second consecutive session. The Dow has new support at 52,900, the July 2nd record close, and resistance at 53,100, today's intraday high. The Nasdaq has support at 25,800 and resistance at 26,400. We closed at 25,818, right at support. The FOMC minutes tomorrow at 2 p.m. Eastern are the first from Chair Kevin Warsh's tenure. The market will parse every sentence for signs of division on the committee. Fed Governor Waller defended forward guidance in remarks yesterday, a subtle but significant pushback against Warsh's stated preference for less communication and more real-time data dependency. If the minutes reveal genuine disagreement, the initial reaction could be volatile. The Samsung sell-off today was a mature repricing of a sector that had run too far, too fast. It does not mean the AI trade is broken, but it does mean the market is no longer paying up for good news. It needs great news. And even great news, as Samsung proved, can be sold. Today's session validated the morning playbook's core thesis. The market is rotating, not breaking, and the rotation is happening faster than most traders can react. The semi-bounce from yesterday was a trap. The Dow record was real but could not hold. Energy absorbed the capital that exited chips, and the FOMC minutes tomorrow will determine whether this rotation continues or accelerates. I am Daniel Reed. Keep your data sharp and your logic sharper.